Welcome, ladies and gentlemen, to Commodity TV and today to a new episode of our online interview series. Today, I have the pleasure and honor to talk to Fury Gold Mines. And with me are Tim Clark, the CEO of Fury Gold Mines, and Bryan Atkinson, the Senior Vice President, Exploration of Fury. Guys, welcome to the show and good morning. How are you?
Excellent. How are you, Mark? Good to see you.
Thank you
Yeah,
very
thanks
much.
for
I'm
having us,
doing
Mark.
well. It's Friday, so it's a long weekend, and that should be all right.
Well, it's beautiful here. How about I hope everything's well over there, and we're excited to talk about Fury.
Perfect. So then just start. You had a next milestone published. So, but before we are going to your latest news release, I would just talk to you about the macro. So gold is doing well, silver is doing pretty well. Gold 2,400, silver is 30 US dollars almost, but the stocks haven't moved. So not all, or I would say just a few moved, just a few hit just a 52-week high, but the rest, except especially you can't see it in the share price. What's going on, Tim?
Well, it's interesting, and it's very typical that historically, when the gold price moves, it takes about 6 months for it to trickle down to the junior golds. As an example, I have a friend who is a hedge fund manager at Goldman Sachs, and I call it big resource investor. And I called him up and I was like, "So what are you doing?" He's like, "I'm making money on gold. I'm buying gold." And I go, "Well, when are you going to buy the equities?" He goes, "I'm going to run this, and then I'll change up my models, and then I'll look at the equities, and I'll start with the large cap, and then move to the small mid cap, and so forth." And that's the methodology that everybody's sort of taking in this industry, I think. You can't be all places at all times, but typically, you will get a torque play with these equities. And as an example, a lot of the large cap producers are really starting to make a lot of free cash flow. And that free cash flow will be converted into acquisitions. But it takes a little time to work itself through the system. But we're seeing it happen right now. And as an example, I know, we talked to Hecla and Hecla Silver. Their free cash flow is up 75 million bucks already in the first quarter, and we think silver's got a lot further to go up. And the same thing's happening on the gold side.
Okay, but if when the companies are earning so much money and they have so much money in the bank, then they need to buy new resources. They need to buy new ounces just in order to extend their mine life. So what's going on with the M&A situation, especially in your area in Canada?
Well, I mean, the M&A has really been in the large caps right now, and there's been a big sort of view that consolidation is coming. One is you have this incredible inflationary pressure that's been on all the companies for their costs. So, a year ago at $2,000 gold, or 6 months ago, a lot of the large cap producers were struggling to make a margin. And think about what that does to the mid cap. They're really struggling. So a lot of it's been compressed and no one's done a lot. They've sat on their hands. But as gold's gone up, all of a sudden your margins go up quite a bit, and it gives them opportunity to look. Now, if you think about Agnico Eagle, for example, their production numbers for ounces rolls over in 2026. And the reality is there's been very little investment in the junior exploration market for over a decade. The few companies like Newmont and Agnico that have put money into the juniors has been there, but they've been constrained as well. And now it's starting to really open up. And when I sat down with the CEO of one of these top three production companies just in December, I posed the question, what do you do in an inflationary environment? And the answer was, quote, "It's easy. You got to own more land." And the idea is that you don't want to build five mills, you want to build one. You don't want to build five roads, you build one. And it's obvious. And so if you think about it, it's not hard to assume that there's going to be massive consolidation across all these industries once gold price starts moving. It allows companies to use their equity increase, their valuation increase to acquire, and it just takes time to work itself down to the juniors. And one of the things that I reasons why I came to Fury is because of the land package that we had. We not only had big properties for a junior, but they're all situated next to big companies. And if you're a big company and you've got a mill like the Éléonore mill in Quebec, one of the top three producing mines, and we own all the property next door, it just makes it easy for them to buy us versus something in an obscure part of the country or up in the mountains. You've really got to find that reason, extra reason to want to buy it. But owning most discoveries of more gold usually occur next to an existing gold mine. It's fact. So
Yeah, you are completely located in a sweet spot, especially with Eau Claire and Éléonore South, right beside the Éléonore mine. So, have you heard some rumors about a new buyer who is interested in?
So Bank of Montreal has an auction is running the auction process in Canada for Newmont. They're going to be selling Porcupine, Musselwhite, and Éléonore. And right now, everybody's been signing their CAs, and they'll be doing the due diligence in May.
Okay.
And apparently, the auction process should happen in sort of June, July.
Wow. Okay, so summer should be a hot summer also for you.
Yeah, well, I mean, you've already got Newmont bought Newcrest, Agnico bought Kirkland Lake, Barrick's the one that's I think everybody's waiting because they've got this big billion-dollar tax benefit that they can apply. But the reality is there's going to be a big scramble. And one of the things that when the auction process went up on Éléonore, we got a ton of phone calls
Yeah.
because of our position strategically. Everybody wanted to align with us as a potential company that was going to get bid out. So there is a consortium in Quebec that's looking at this. There's also multiple players in the mid cap. There's some high net worth guys who are putting together money to potentially buy it. So there's going to be a lot more interest than I thought there would because the reality is these kinds of assets don't come up for sale that often. And this is one of the top jurisdictions in the world in Quebec. I think there's going to be a lot more interest and create a lot more fever around acquisitions.
Wow. And to be honest, you are way too cheap for all your ounces you have, for all your projects you have, for the situation right beside Éléonore mine. So it's crazy, but yeah, it's a big opportunity for all the investors.
Well, what's amazing is so we just purchased the second or half of the 50% of that joint venture from Newmont. And a lot of people can't believe they sold it to us. They think, oh, okay, there's nothing there because Newmont's out. And what they don't understand is Newmont's out of Canada, so they didn't really care to follow up. The irony is we've got all this property, and our best exploration targets happen to be in this joint venture,
Yeah.
and so we couldn't get at them because it was owned by multiple players. And it's kind of my analogy is kind of like owning a boat. Nothing gets paid for, nothing gets fixed with when you have multiple parties, and that's kind of how it was. But once we acquired this, now we've been very aggressive. We've already been out drilling, and we're waiting for the drill results now from the northern east part near Sirios. There's another resource
Yeah.
on the property there, and but the Éléonore anomaly that's right next to Éléonore mine is our biggest target, and we're going to be doing a big geochem project in May, and we'll find out the results at the end of the summer. Hopefully, get a drill will be drill ready, and we'll get a drill in it by the end of the year or early next year.
Yeah, that's also really nice informations, Tim. But let's come to your latest milestone. So you updated just a couple of days ago your mineral resource of Eau Claire. You had phenomenal results now measured and indicated as well as inferred numbers. So let's come to these numbers. Bryan, please explain us something about it. What's special, what's important, and maybe also what the investors or the market is not understanding correctly.
Yeah, definitely. Thanks, Mark. And I'll just start by saying this was a culmination of a few years of work and a lot of effort put in by our team out in Quebec, and it's nice to kind of get it off the chest and be able to show that this resource does get bigger in a meaningful way. So when you look at just Eau Claire, we've increased that resource by globally by 38%. So measured and indicated up 36%. So really nice there. And our open pit, given the higher gold prices and stuff, we were able to make a slightly bigger open pit, but we were pretty conservative on it still. And our overall global Eau Claire deposit alone, open pit grades are 4.65 grams. We've been doing a lot of peer comparisons, just trying to get this going. And that's higher than a lot of people's underground grades, right? And this is our open pit grade at Eau Claire. So it was really nice. People talk about these high grade starter pits. This whole pit is high grade. It's ready to go at 4.65 grams globally. And then our underground grades, when you combine measured, indicated, and inferred, stayed. They're just shy of 6.2. They're 6.18 grams going underground, which is really nice grade for underground. So when our independent, so SGS Geological Services is doing the resource here. And when they looked at it and ran the numbers and everything, they called us up and we're like, man, we don't see very many resources with this grade and these many ounces in today's day anymore. He says there's not many of these left, right? So it's pretty good. And then on top of that, we brought out Percival with very minimal drilling on our end. We've only put about 7,500 meters of drilling into Percival and come out with 211,000 ounces of gold out there, largely in an open pit, which is nice. It's 14 kilometers away from the Eau Claire deposit. We did the prelim metallurgical work, and metallurgically, the two deposits behave very similarly. So it's a nice sort of complement to it, and that brought in an almost 45% increase in the property's inferred resource category. So overall, no, we're pretty happy adding, globally over 500,000 ounces to the project, split between the two deposits, and coming out with a maiden resource on, in an area where we're quite excited about. We've got a lot of other anomalies out around Percival and up to the north to Serendipity. That could, start being this string of pearls that we've been talking about. So pretty good.
So you added over 500,000 of ounces, open pit and underground scenarios, but your stock hasn't moved. Why?
Yeah, I'll leave that for Tim. I flabbergasted. I bought shares as soon as I was allowed to again, and we got the resource out. I was buying shares again. So I don't know why other people aren't.
I'm also a shareholder in the company, so I'm also happy with the results, but I couldn't understand.
Well, I bought 50,000 more shares a month ago, and I just felt confident that a big improvement after 3 years of drilling would see a reaction. I think I'm kind of baffled too, but the reality is I think there's a bit of an arbitrage in our story because we own so much Dolly Varden stock, and Dolly Varden's gone up so much. And I think it's sucked a little of the attention and the liquidity out of our story. What investors don't realize is our ounces that we have in the ground are trading at less than $5 an ounce, and Dolly Varden's equivalent gold ounces are trading at $165 an ounce.
Okay.
And so you can buy our company and you basically get an equal, if not larger, with higher grade resource at an easier location to get where you can drive a truck up to. And you get basically double the resources that you get buying Dolly, and you get to buy it at a cheaper price.
Wow.
So,
and it's also right beside a production mine, so a producing mine, one of the three best mines in Canada. You are located, but you are so undervalued. For example, yes.
Well, if you think about the whole excitement for Dolly is that it's on the verge, if you will, if you can kind of project. And this is my opinion, so I don't know for a fact, but Dolly is really well positioned for a takeout from Hecla
Yeah.
because it's surrounded by Hecla. Hecla's come in 5, 10, 15%. They got one big summer of drilling. Silver prices are taking off, and everybody's excited about Dolly Varden takeout. Well, at our prices, the likelihood that Hecla would just buy us as a company are just as likely as them buying Dolly Varden.
Yeah.
So we're in the potential takeout position too at these prices. But also we own properties now with this strategic joint venture we just bought in February that sits next to one of the top 3 producing mines in Canada with Éléonore. It's up for sale. It's coming in June or July. And whoever comes in, they're buying an asset that's been undermanaged. It's got a mill that's under capacity because it was overbuilt. And they only have 5 to 7 years of mine life in the system. They need to find more ounces desperately to really make the big money on this. And we own the biggest opportunity next door to them that sits on their property. The likelihood that that's going to get bought out at some point, to me, is pretty obvious. And then at that point, we own the Eau Claire mine, which is 50 kilometers south, that has the same chemistry that can fit all that into their mill as well. To me, we're a total takeout story eventually. The reality, though, is no one's paying attention, and there's an arbitrage on our stock price.
Yeah, it's amazing. But that's kind of my responsibility to spread out this news that you're
Right.
so undervalued. And everybody who's following us now, this person has to check the company because, yeah, it's a unique opportunity in the market. You can't find it that often.
So I actually was just spent a lot of time marketing on the East Coast of the US. And I had one guy come up to me. He's like, I love mining. I own a ton of mining. How come I've never heard of your story? And I said, well, there's 900 companies like us. We're small cap companies. But I said, one of the unique things is that we're listed on the New York Stock Exchange.
Yeah.
And most juniors are not. It's too expensive. They can't get on it. We got through there historically. But most of the money in North America sits in the US, and they can't buy the Canadian names, but they certainly can buy us. And this is going to be where, when the market money flows come into the space of the junior space, we're going to be sitting in a very pretty spot for a lot of acceleration of our share price. And if you wait, you're going to miss it.
Sure, of course.
Yeah.
Just coming back to Dolly Varden once a second. How big is your stake now? And
54 million shares. So for every 10 cents increase in that share price adds 5.4 million to our ownership.
Okay,
So
perfect.
theoretically, every time it goes up 10 cents, we should make 5.4 more million market cap. But it's not been happening. It's been up 30% or more since February, and our share price is lower. That's the reality.
Yeah, but I've visited so many conferences. I've seen so many junior exploration companies. Almost 80% of the companies are running out of money, but you are in a unique spot. You have so much money to spend on new exploration targets in order to drill more drill holes, in order to extend everything. So you don't need to dilute your investors, right?
Well, we've been probably the best ones at not diluting in the last 2 years. We've got 5 million in cash in the bank, and that will actually do most of what we want to do this year. And then as an example, when we walked in to see Agnico Eagle, they asked us if we needed to raise money with them, and we said we don't need it. And the head of corporate development turned to the senior guy and said that you're looking at the best finance junior in exploration, hands down. And that is why I think we take a lot of the risk away.
Yeah.
And so when you invest in juniors, your biggest risk is you go bankrupt or you get behind on the money. And we've been way in front of that. And this Dolly Varden gives us a unique. It's unique. We're in a unique position, and people don't recognize it, and they will. They'll figure it out. All you got to do is get your calculator out, and it's a very quick assessment of what's going on. And this resource update validates the fact that we have a resource that isn't just bigger by 500,000 ounces. We're not cut off anywhere. In every direction, it's open. So if you're a mid-cap producer and you come in, you're like, wow, I don't just see 1.8 or 1.9 million ounces. I see the potential to grow this. Plus, you got this satellite with Percival, and we've got 15 more anomalies that look just like that signature, if not better. And someone asked us yesterday if we were going to go out and drill more at Percival, and Brian's response was, well, we actually have better targets, bigger iron formations. And it's all because we own 30 kilometers of this Canard deformation zone. It's a massive land package for a junior. We should be 2 or 3 different junior companies. And I think people get lost in the story a little bit because we're not a simple story. There's a lot to tell, so people get confused. But as we unravel this, it's going to be a huge potential for making money.
100%. And you are spending your money you have wisely. So as Bryan said, just 7,500 meters for Percival to get over 200,000 ounces in inferred category. That's amazing. So what's your plan for this year? What's your exploration program looks like?
Well, it's Brian said to me yesterday the global average is about $100 an ounce, and we're doing it for $40 an ounce. But we're getting paid $4 an ounce for those ounces, and that's going to re-rate. And so, but one of the things we want to do is, as I said earlier, we've built a really great house, and we're just going from room to room trying to improve the decoration. And so, we're going to do this anomaly, which is a $500,000 survey. It's a really intensive geochem survey that should tell us a lot up in the joint venture. And then we also would like to get out. Once you open camp, it pays to have things going on. It's cheaper to have 2 drills than 1. So we're trying to assess how much we really want to spend. But we would like to go out to some of these anomalies on the Eau Claire property that look really prospective. We're waiting for results to come back from the Sirius side of our drilling program to decide if we want to go back up and do more drilling there. And then we're going to spend $200,000 to go up and do a survey up in Nunavut. And a lot of people forget about that. We get zero on our market cap, but there's 1,000,003 ounces up there that people forget about. It's a 300-kilometer greenstone belt that's historically had $180 million already invested in it. And so we've been getting a lot more attention from the producers in the last 6 months that want to hear more about it. So we're going to go up and test one of our last discovery, which was a marquee drill hole. And it was confusing to us because it's in a shear zone and not in an iron formation. And I think there's potential to get an investor to come up there and do a joint venture with us. And that's the goal. And we're going to be ready when we go back to Deep Beaver Creek in September, which is where we do a lot of our meetings with these majors. And last fall, we sat down with Barrick, B2 Gold, Agnico, Newmont, and others, all asking about that big potential up in the Arctic. And what a lot of people we've talked about earlier is all these big companies need to replace their ounces, and they need big projects. And we have one up in the Arctic that potentially could be a big project. And you need about 5 million ounces, and we're at 1.3, but you get an investor like Barrick or Newmont to go up there, and that's where you can really accelerate your stock price. And that's where you can win, and that's where the big gorillas are. So we're going to try and push that forward. And I think that will be exciting as well.
Perfect. So would be that your first target this year, going up to Nunavut, or is Eau Claire more up
Well,
on
the
your
joint
list?
venture, the joint venture is where I think there's a lot more excitement right now because of the Éléonore purchase coming.
Yeah.
And so the anomaly that we're talking about that's next door to the Éléonore mine has the same signature, the same scale as the Éléonore mine itself. And that to me is a game changer. If we put 3 good drills into that thing, the whole company goes.
Yeah.
It could be awesome. And so that's what we're going to test first.
Okay, cool, perfect. And you also mentioned your neighbor around Éléonore, so Sirius Resources. They
Sure.
also did some drilling. They just finished a very small private placement. So what's your view on this company? And Bryan, what's your view on the drill results from Sirius around your deposit?
Well, we haven't gotten our drill results back yet from our drilling. And what we're doing is we're just testing to see where the high grade is coming around that property. Sirius is a 2 million ounce low grade asset. Originally, it was too low grade to ship over to the Éléonore project. Newmont owned a piece of it. We took over there when we bought the joint venture. We got their shares from Newmont. Um, Look, I think that's a great add to a land package, and a lot of people think that we're going to go out and buy it tomorrow. The stock went from 8 million market cap to 20 million the day that we bought the joint venture. And so I think people assume that we're going to go in there. The truth is, it can't go anywhere because they're restrained by the property line. They can't build their open pit without our property to go with it. And right now, I think they're struggling to raise money or do anything over there. I think, and what my guys are sort of projecting is the high grade that sits on the wall there is really kind of drifting our way. And we're kind of in the catbird seat, and there's no rush for us to do anything. But my view overall, and it takes 2 seconds to look at a map to assume that whoever ends up buying Éléonore could likely consolidate that whole region. And it plays into the inflation. You got to own bigger property, bigger land, and they need to do something. Newmont has sat on their hands for a decade and done nothing. It hasn't been a priority for them because they got bigger players, bigger things to do. But whoever buys that is going to be a lot more proactive. And I think that whole area in not too far along future will be consolidated.
Okay, and the drill results from Sirius, Bryan, what do you think about these results?
Yeah, they were good. When you're looking in so I think what's going on there is there's two different styles of mineralization, and you've got the low grade reduced intrusion gold system, which is giving you the bulk of the ounces and stuff. But within that, you've got like an orogenic quartz vein, high grade sort of overprint, and those things, as we know, exploring both down at Eau Claire and up in Committee Bay, those can be quite frustrating to try to put together because of how variable the gold is within those structures. So they came out good. A few holes hit some really nice things, and then as usual, you get a few holes that are lower grade within it, but you're putting together the overall structure there. And those that so they drilled on Eclipse. You cross this imaginary line that's the property boundary on our side. We call it the Moni showing, and they're contiguous to each other.
Mhm.
And it's so there's this argument of does a high grade dip to the north, does it dip to the south? We see dips to the north, we see dips to the east, we see dips to the south, we see dips to the west. These things
Okay.
are sort of all over stockworky, vein arrays within the lower grade sort of halo. So it's kind of cool, and we're really looking forward to our results. We've had the project for since 2020 when we got into Quebec, but we've only had it ourselves since February,
Yeah.
and getting in there with our our first drill program into it, and just seeing, what the rocks were like, what it was going to be like to go there and, potentially have a bigger program. This was just kind of a, dip our toes in the water before we jump full in and go after this anomaly that Tim was talking about that we really like, because it's got the potential to be high grade and very similar to style of mineralization, at least to Éléonore. Scale wise, we'll see, right? We want to drill that as soon as we can. That's for sure. Yeah.
Amazing. Perfect. That sounds good to me. So the more I get the information from you guys about all about Fury Gold Mines, the more I want to buy more stocks, but I have to be careful sometimes. Just
we get in love with certain things. Yes, I get that.
yeah, but gold
I'm
is
all
hot.
in. No, listen, I can't complain. I'm all in. I've bought as much as I should, or more than I should. I got my whole career on this. And someone asked me the other day, how many companies are you working on? And I was like, one. This is it. This is the one I believe in.
Yeah, and that's also amazing. You have a great management team. You are very conservative. You are very strict of doing. You are saving so much money because it's your money as well as the investors' money, and that's also something you have to focus in your due diligence as an investor. And I really like that.
Well, look, I spent 25 years on a sales desk, watching and listening to all these management teams come through and meet all these investors. I've done my not 10,000 meetings, 20 or 30,000 meetings. And the two most important things in a junior is having the money and having a management team that doesn't blow it. And that's disciplined. And I've got the other part is I've got a lot of people surrounding me, and this is what I think I've done well in my career, who are a lot smarter than me, who I can turn to for advice, and we use that. We have a very open format conversation on our company. Everybody is given all the information, and we discuss it and decide what's the best course of action. And we've taken this expense down by 50% in the last 2 years. We're looking to try and cut that even more. Our biggest cost really is being listed in the New York Stock Exchange, and I think in this kind of environment, it's the best investment we have, to be honest. It's going to really accelerate this company. We should be a much bigger company in market cap, and we'll get there.
For sure. So thanks for your time, guys. For me, as a conclusion, so you have three projects, Eau Claire, Éléonore South, and up in the north in Nunavut. Three amazing projects, gold projects. In the north, you have the opportunity to get maybe a joint venture in, so you can accelerate even faster, all that stuff. Éléonore, the mine as itself, is on focus on every major or mid-tier producer. So in that, you are also on the list because you are completely directly around, also just 50, 60 kilometers down south with your Eau Claire project. You had an amazing milestone with your upgraded mineral resource now, almost 2 million ounces in the ground. Way too cheap for the valuation of your company. And also your stake in Dolly Varden, so you can also easily play the silver, the silver thing. So for me, I'm just waiting on the next drivers, on the next catalysts, and then we will hope that the stock price is going up.
Yeah, listen, we've got everything set up. We just got to be patient and let it come to us, and that's part of being a good investor.
For sure. And also my investors, our investors should extremely check out the company. If there are some questions, come back to us, and then we are happy to answering the questions. Have a look to Fury Gold Mines. It's a really good play for the future, and thank you for your time, guys.
Thank you, Mark.
Thanks, Mark.